here with you right here on India Development Debate Direct. I'm Supriya Shrinate. And quite clearly, the back-to-back scams involving public and private sector banks have exposed the chinks and governance practices in the Indian banking system. Now, even as the debate goes on whether Chanda Kochar should step down as the CEO of ICICI Bank, of course, after the clash of interest charges against her husband, Deepak Kochar, experts do believe it is time for a complete overhaul of banking regulations, especially when it comes to related party transactions. Now, questions have also been raised on the indifference of the central bank, which has been complaining about the lack of powers when it comes to supervising state-owned lenders. What is it that ails the Indian banking industry? What can cure the system? And more importantly, can market regulator SEBI play the mute spectator as this crisis evolves, even as thousands of crores of rupees of investor wealth go down the drain for no fault of theirs? To discuss all of this, we are joined by none other than Mr. M. Damodaran, former chairman of SEBI, on the India Development Debate Direct tonight. Thanks very much, Mr. Damodaran, for being with us and sharing your views. I really must begin by asking you, and the question really is, would you agree that the high-profile cases involving two leading private banks have perhaps exposed the poor governance standards in India's private banking space? I mean, there's so much that's written on the public sector banking space, and there was this whole debate on privatization. And now when you look at the fault lines that exist between private sector banks, do you believe it is the poor governance standards in India's private sector banks that kind of come to light?
Well, I have never maintained that the private sector in terms of governance is better than the public sector. Mine has been one of those few voices which has consistently maintained that governance standards, performance, etc. are ownership neutral. If you have good processes, good people driving good processes, there will be good governance standards. So I am not entirely surprised, but I am certainly unhappy at the developments.
Before I move any further, Mr. Damodaran, I do want to spend some time talking about the specific case in point right now, and that's ICICI Bank. Do you believe it's the board of ICICI Bank which was wrong to have given a clean chit to its CEO based on an internal evaluation? And just in the interest of more transparency, should the ICICI Bank board have ordered an independent probe, given how grave the charges that were being leveled against the incumbent CEO are?
What the board seems to have said, and I'm going entirely by newspaper reports since I have no access to any additional information. What the board seems to have said is that, look, this complaint came in some time ago. We looked at it, we found there was no merit in it. Therefore, we believe that there has been no wrongdoing and there's no need for any action. But even if this complaint had come in before, considering that the reputation of the bank is involved, that stakeholders are anxiously looking to the board to provide clarity in this matter, the board should have acted again, treating it as a fresh complaint and got it investigated by an external agency, and there are any number of agencies that can do it, in order to create a climate of confidence among the stakeholders. To say that we looked at it 2 years ago, well, was the scope of what you looked at different? Because it's not just one element that there is to the complaint. There are at least 3 elements. Did you look at all of these? Because some of it seems to be relatively new. And even if you did, get another inquiry done. That would be, I think, the right way.
Okay, you know, I also want to speak to you, sir, exactly on that. In the interest of transparency, and you know, the ICICI board's chairman in his statement had said very categorically that there were questions that the regulator had sought and answers have been given. But do you believe, in the interest of keeping it absolutely open, absolutely transparent and fair, should the board have divulged the disclosures made to RBI? Because questions remain on what details have been sought by the regulator. And many questions have actually been asked on the credibility of the report of the regulator, what details have been sought, and what sort of answers has ICICI Bank given to the regulator?
Well, that is something that, you know, it's a judgment call. How much will you reveal to the public at what point of time? Remember, there's an ongoing investigation by a criminal investigation agency. It is at the stage of a preliminary inquiry. Nevertheless, that is the starting point of any investigation. At that point of time, perhaps there could have been a reasoned call taken that all right, we will just state the bare facts and no more. But far more important is the fact that the board should have been seen as taking this seriously enough to look at it independent of the investigations. Which is why I said an external agency. Normally the way to go in these matters, when a very senior person is the subject matter of the allegation, is to get an external agency to come and look at it, because once the external agency says we've looked at it and everything is clear, it reinforces the position not just of the official concerned, but the board which decided to support her.
Okay, the board decided to support is a point of discussion and perhaps a lot of debate also, Mr. Damodaran. But there is also this growing clamor for the ICICI chief, Ms. Kochhar, to step down. On large shareholders, ratings agencies like Fitch have all expressed their displeasure. I mean, brokerages have said there could be class action lawsuits. Ratings agencies like Fitch have said there's a reputational risk. Do you believe the board kind of needs to ask her to step it down, at least stay aside? Or can it actually afford to wait till the investigation is over before taking a call on her term?
The 3 or 4 elements we need to look at. One, the reputation of the bank is on the block. Stakeholders are asking questions, institutional investors who are large shareholders are asking questions. The layperson who is reading newspaper reports is also asking questions. It could be a depositor also who is asking questions. In the light of all of this, and the fact that there is an investigation, there are 2 ways. One is for the CEO to step down and say, I don't want any part of this, I will prove myself to be right, as and when the procedure gets completed. The other is to step down for a period of 3 or 4 months and say that, all right, while this thing is going on, I'm not going to be there, which is why this ties in with what I said earlier. Get an external agency, request her to go on leave. She's worked hard enough all these years, and I'm sure could do with some leave. Request her to go on leave for a while. She doesn't have to vacate the post forever, and then see what the outcome is of the investigation. That's the way to go. Otherwise, you're giving the impression that, no, we think everything is right, and the rest of the world says, well, tell us why you think it's right. That's not a very happy situation to be in.
I like the fact that she's worked hard enough and she can do with some rest. But the question also, sir, is, and this is where I need to pick your brains. You've been a former regulator. I'm sure you've got a lot of these complaints. There are many questions being raised on the whistleblower alarm that came in as way back as in 2016. This was about 2 years back. Now, he did write all the way up to the Prime Minister's office, to the banking regulator RBI, and to the market regulator SEBI. Because remember, both entities that we're talking about, whether it's ICICI Bank or Axis, these are all listed entities, especially ICICI here. What explains the silence of the regulators? You've been the market regulator yourself. I'm just curious to understand, what would your reaction have been if you were at the helm of affairs today, especially after you got the kind of complaint with such grave charges that was being raised? Because, truth be told, it is shareholders' money as much as it is the depositors' money. I mean, I'm a stakeholder in that story because I'm a depositor, and that's what a lot of people are saying. They may not be shareholders, but there are depositors who added value to the bank.
Well, we must not confuse silence with inaction. It's entirely possible that having received a complaint in which a CEO and MD has been named, the regulator as well as the government would have had it looked at. But that's not to say that they would have come out in public and said, look, we've received this complaint and we're looking at it. But I'm not sure that all the elements that are playing out now in terms of whether there was a brother-in-law that was restructuring the accounts, whether the investment has a causal relationship with the loan sanction to the company, whether all of this were gone into, or was it just, and I'm speculating, was it just the fact that a loan had been sanctioned, to which the answer could perhaps have been, well, 19 other banks did that. Yes, the loan went bad, but no one says you get all your credit decisions right all the time. So unless there is any indication of mala fide, Where there is a huge conflict of interest written all over this is the fact that when you take that into account, not in an isolated fashion, but along with the fact that there has been an investment in a company promoted by the spouse, and now complicated further by the fact that the brother-in-law has been doing restructuring of several accounts, we don't know what the facts are. There is an investigative agency tasked with this responsibility, which is going at it methodically from what one can see in the papers. Given all of this, to say that we looked at it earlier was not good enough. But also to think that nothing was done in 2016 might not be the right conclusion.
But Mr. Damodaran, the government's role is also under question. I mean, I understand where you're coming from as far as the regulator is concerned, but what about the government? The government has so far stayed away from these developments. I mean, the Joint Secretary in charge of private banking, Mr. Amit Agarwal, who was then, of course, the nominee director on the ICICI Bank's board, did not attend that board meeting. We're given to understand Lok Ranjan may not attend either. And the bigger question is LIC, which is completely owned by the state, owns over 12% stake in ICICI Bank. I mean, how can they be quiet? The government nominee is quiet, LIC is quiet. In a meeting that gave an all-clear certificate to Chanda Kochar, is the government trying to skirt the controversy? Because pretending it doesn't exist perhaps is not going to help.
No, I think as far as the LIC is concerned, being a very large shareholder, they ought to have led from the front in terms of saying that let us put a process in place to see that this issue gets addressed. As far as the government is concerned, well, the government has a representative on the board, and I'm sure that he must have participated in the discussions either during the board meeting or there could have been consultations offline with him. Somehow, I don't get the impression that the matter has been dealt with in the manner in which I would have liked to see it dealt with. But that's not to say that government is withdrawing from looking at this or the regulator is not doing it. They're all going about it in their own ways.
Okay, they're going about it in their own ways, but in the case of ICICI, Mr. Damodaran, it has very clear guidelines on related party transactions. When it comes to practice, the bank is perhaps throwing the company low at you, saying that the brother-in-law is not a relative. And in fact, we had sought a query ourselves, and that's exactly what was told to us by the bank, that the brother-in-law is not a relative. He's an independent businessman, can do his own business. Now, how valid is this argument? Is this something that cuts eyes with you? Because, you know, Rajiv Kochar is apparently told investigative agency SEBI that he and Deepak Kochar have a strange relationship. They haven't met each other for years except socially in family gatherings. Now, how valid are these arguments when it comes to conflict of interest charges and the kind of disclosures that were perhaps not made?
There are two aspects to this. One, the technicality. I don't think this is a matter in which you should hide behind technicalities. The fact that there is a relationship, no matter that it is not covered by the list of relatives in the Act or the regulations, the fact that there is a relationship not too far removed is certainly a cause for concern. Two is the fact that accounts were restructured. Let's assume for argument's sake that yes, they were operating completely separately, they had nothing to do with each other. Let's assume all of that. The fact that the restructured accounts were partly ICICI Bank's accounts, and he would have done that, I'm sure, of several other accounts also. That is extremely uncomfortable, a situation to be in, because are we saying that no one was aware that he was doing this restructuring? Are we also saying for a moment that for all these years, and one of the accounts mentioned is the account of the company where the other elements of the controversy exist. So hiding behind technicalities does not enhance the reputation of a large corporate entity.
I understand the technicality, and I think a lot of people hide behind this, and this is precisely my follow-up question to you. Do you believe there needs to be legislative changes in companies and the Banking Act to define what is conflict of interest in a crystal clear manner? Because it's the grey zone that it exists in, and the many technical loopholes that exist that amount to disclosures not being made.
I don't think it is an inadequacy in the Act. You can, the problem sometimes is that whenever there is one transgression, and I'm not for a moment suggesting there is one, but when there is an alleged transgression, the tendency is to immediately amend the Act or the regulations. It becomes a knee-jerk reaction to some episodic, situation and not something that is systemic. I don't think we should rush to amend acts in order to enlarge lists and things of that kind. What is more important is the substance of governance. The provisions of the Act provide the forms of governance. The substance, is there conflict? Is there a suspicion of conflict? If so, who should address it? In what manner should it be addressed? And in what time frame? And what are the steps you put in place, such as the CEO not being the CEO during that process? These are the issues which promote confidence, not the fact that this having happened, you add the brother-in-law to a list of relatives. We can keep on adding relatives and then bring business to a complete halt. That's not the way to go.
Okay, so you're not a fan of knee-jerk reactions, especially when they happen on the back of controversies and crises. I kind of appreciate and understand that. But let me talk to you about yet another controversy, and that plagues Axis Bank. Shikha Sharma has been given a 7-month extension. Yes, her overall tenure has been significantly reduced, but she's still been given a 7-month extension. Now, is that justified? Many experts have pointed out that the question was not about the duration of the term, which has now been significantly reduced, but about the impropriety in allowing her to continue. And that's exactly what the regulator RBI had actually red flagged.
See, as far as that particular matter is concerned, what worries me is the role of the board. The board, after she has been through 2 terms, nearly completing the 3rd term, is reported to have, and as I said, all of this is derived from the newspapers, is reported to have engaged an agency to find a successor. Shortly thereafter, it decides to give her a 3-year term. I'm sure this must have been discussed. They must have looked at alternatives. Well, that's the way to look at it. Not to ask yourself the question, does the person deserve a 4th term? That's not the question. The question is, for the next 3 years, who should provide leadership to the bank? And it could very well be the incumbent, who is the person that you finally identify. So you should broaden your search. Not every time a term is over, ask the limited question, is the person good enough to be given another term? Then you can keep going on till kingdom come with the same leader. It's not good for the organization. I think having given her, having recommended a 3-year term and found that the regulator was not in favor, there should have been a conversation to say, why did we recommend a 3-year term? On what basis? What process did we follow? Sorry. And try and convince the regulator. Of course, the regulator, I'm sure, has information on the basis of which they've not looked at a 3-year term favorably. And now I think she's done the right thing. She said, okay, I will step down in December. That leaves the bank enough time to find her successor.
Mr. Damodaran, I think it's only fair that I look at the big picture and ask you a very important question. And that question has to do with the fact that a lot of people believe, and I wonder what your own view is. Do you believe that the law is extremely lenient in India when it comes to white-collar crimes? I mean, you take the case of Rajat Gupta. The man's still very much involved. The man is still very much behind the bars. You virtually don't have any parallel in India. Now, as far as the quantum of punishment is concerned, my own sense is that there seems to be this very high level of tolerance to white-collar crimes in the country.
There is a perception that there is a high level of tolerance to white-collar crime. There is a perception, not just in this particular space, but elsewhere, that it is the smaller people that get caught quickly, tried quickly, punished quickly, whereas more influential people are able to ensure that the long process of the judicial system works in their favor. But that said, the answer does not lie in amendments to the Act, in provisions and regulation. It is really enforcement of existing regulations in a person-neutral manner, looking at the rich and the poor alike, the weak and the strong alike, and looking at the seriousness of the transgressions and addressing them quickly and effectively. That perception that the rich person is not as disadvantaged as the poor or the weaker section when it comes to the way laws and regulations play out is a fairly pervasive kind of perception, and that's something that is addressed sooner rather than later.
Mr. Damodaran, despite a slew of governance reforms that perhaps one has witnessed, why is it that Indian boards continue to be subservient to the interest of either the promoter or the chief executive? And my question specifically also pertains to independent directors, because despite all these changes, despite the whole narrative, they have continued to be silent spectators.
No, we don't know what happens in boardrooms. It's entirely possible that independent directors might not have thumped the table, but they might have put across their views strongly. Let us not, in the absence of evidence, assume that independent directors in boardroom open their mouths only when the tea and the cookies come. No, far from it. I have seen independent directors engaging management in serious conversation, challenging management propositions, often helping to either refine them or even decline management proposals. So a lot of things happen in the boardroom. It is not a stereotype of the promoter having his or her way, while the independent directors just make up the numbers in the boardroom. That is not what happens in boardrooms. Increasingly, directors, because of the liabilities, are far more conscious, ask the right questions, ask the tough questions. On occasion, it's entirely possible that management pulls the wool over their eyes, but those cases hopefully are not as many as we would like to believe on the basis of one or two cases having gone wrong. In the board, there should be, and I've said this times without number, a constructive tension between board and management. And that should be led by the chairman of the board. If that doesn't happen, the management looks at the board, and I'm repeating what I said in a seminar earlier, as either a procedural nuisance or a substantive diversion. And the board is much, much more than that.
Okay, so you believe that the board and the CEO should have creative differences, which is always augured well. But as I wrap this, what would be your 3 ideas to reform the quality of governance in India's banks? And I'm really asking you to pan across public as well as private sector, because it looks like fault lines exist on both sides.
No matter what laws you put in place, what regulations you have, most of them will not have any effect. You need to see value in governance. You need to see that governance is a necessary condition for sustainable performance. It's not a sufficient condition. You need to have products, you need to have markets, you need to have all of that. But you also need to have good governance practices to ensure that the company survives on a long-term basis. What regulations provide is an environment of compliance. Compliance is a threshold condition for governance. Governance is the mind. Governance is not in the statute book. If the value system is right, if the interests of the stakeholders are protected by the board, led by an effective chairman, you don't need to see too much about what the laws provide or don't provide. The answer doesn't lie there. Yes, there are important steps, one of which the Quota Committee has recommended and SEBI has accepted, which delights me because I have been speaking about this for a long time, which is the separation of the chairman and the MD position. Because that combination negates governance. You can't have one person who is the MD of the company and another who is the chairman of the board, the same person discharging both these functions. It reduces everybody else to spectators. And I don't think that's the kind of situation that we should continue to tolerate in the corporate environment.
But do you believe there is a concern that this cleanup, which is long overdue, and this is a point of view that a lot of expert commentators, economists have kind of brought to fore, that this could all paralyze the Indian banking system, and bankers may be wary and choke credit flow. Are you worried on that account at all?
Well, I've been unhappy with some of the changes that have been made. For example, the appointment of a bank boards bureau. I think this is a function that between the government and the RBI should have been continued to be discharged, of course a little more effectively than it was discharged. Making the bank boards bureau give you recommendations that you don't act on for months, and there are banks that have been headless for months. As we speak today, one post of deputy governor, which is a critical post, is vacant. I think one of the things that we need to do is to go back to a recommendation of the Narasimham committee, which says set up an independent board for financial supervision where only the governor is common to the RBI and the BFS, not the deputy governor. If you don't do that, you're not even getting started as far as putting in place the right systems are concerned.
So talking about governance norms, and I know we kind of overshooting on time on this show, Mr. Damodaran, but are you surprised at all that the RBI governor says that he has asymmetric control when it comes to public and private sector banks, and which is perhaps what has led to the mess in the public sector banking space, something that you alluded to?
I was both surprised and saddened by that statement. For the person heading a central bank which has been in existence in 1934, to say in public that my organization does not have powers does not inspire confidence. Even if you didn't have powers, I think you shouldn't have spoken about it. But the other point that I have is removal, let us say, and this question's been raised before, the RBI cannot remove public sector bank chairman, but I know many years ago that the RBI spoke to the government and got rid of one executive director or chairman, I forget, in a public sector bank. After all, the regulator and the owner act together in these matters. It doesn't matter where formal power resides. What matters is that you're on the same page as far as the person is concerned and as far as the step to be taken is concerned. So I was a little disappointed, to say the least. Maybe he had his reasons. He was being, or he, not just he, but the bank was, the Reserve Bank was being attacked, and he felt obliged to make that statement that as far as the statute is concerned. But powers often are what you exercise, notwithstanding what the statute provides.
All right. On that note, Mr. Damodaran, can't appreciate you enough for taking time out and speaking to us. I equally share your shock and surprise on the banking regulator coming out and saying that they have no control, but of course there are many incidents that may have triggered that. But thank you very much, sir, as a former regulator of this country, to speak on a crisis that has plagued India's banking sector, both public and private. We appreciate you joining us, and as somebody who's been at the helm of corporate governance norms in this country, it's always good to get your views when India's two large private sector lenders are embroiled in controversies like this. Thanks very much again for being with us. Thank you, viewers, for tuning in. Keep it with ET Now. Plenty of news, views and analysis follow right here.